While many people today think they're not into economics and money and listening to all that, what few don't realize, at least in the beginning, is that economics is at the foundation of everything in our lives, and it permeates every area of our life, including science and health and politics and every other area. And so understanding the basics of economics is the key to unlocking understanding of all those other subjects. And today I am joined by a good friend, someone I've been excited to talk to and bring to you for a long time, author of one of the books that I think is very instrumental and everyone should read. And we dig into economics. We talk about how it's that foundation for the rest of everything. What is at the root of that, the two different camps of economics and how they're at odds with each other, how one of those camps has really driven all the policy of the developed world and kind of politics where we're at today, the problems that it's created, how to solve it, what's at the root of that problem and how we can solve that problem, and so much more. I am excited to have this interview with you today. I hope you enjoyed it as I did, so let's go ahead and just jump in. Hey everyone, today I'm joined by Saifedean. He is a PhD in economics, he's an independent scholar, and he's a teacher on his own website, Saifedean.com. He's also the author of the Bitcoin Standard and the new coming book, the Fiat Standard, which I think everyone is pretty excited to read. I know I am. I read quite a bit of it you released. But anyway, Saifedean, thanks so much for joining me today.
Thank you so much for having me, Mark. It's a pleasure to be chatting to you.
Yeah, it's great. I'm glad we're able to finally get this together. I've been a big fan ever since you kind of popped up on the scene several years ago. Big fan of your books. I've recommended them nonstop. But what I really like is the take that you have almost on everything that seems to be counterculture today. But you always are able to tie it back to economics. You have such a good understanding of that. I have so much I want to dig in today, but just real quick, why don't you just kind of give us a background on who you are, what you're doing right now?
So I used to be a university professor at the Lebanese American University when I wrote the Bitcoin Standard. And then that went well, and my work in Bitcoin became quite popular, and I decided that I could make a lot more impact by being independent and producing my own research, publishing it on my website, publishing my books and selling them to my readers, and teaching economics on my website. So I teach I've got 4 economics courses that are available on my website that you can take, and you can join the website as a member and study the courses, which are recorded, and then you can join the 2 live seminars that we have every week. And it's my kind of 21st century take on the university model. And I started this in 2019, and then in 2020, the rest of the world's universities joined me, and now they're all teaching over Zoom anyway. So it's kind of inevitable because of the economics involved. I mean, sure, the university model of going and hanging out with a bunch of 20-year-olds is obviously a lot of fun. But the economics of it in terms of education, when you have the alternative of essentially learning for free or close to free online, is just too compelling. And it's not like if you learned online, you can't socialize. You can still go out. You don't have to stay stuck in your house. You're just going to be learning much more efficiently. And then you can socialize and invest and network and do all of those things with all the time and money that you save, and you can do them a lot better. So this is where I am. And I've also, since leaving my university job, I've written the Fiat Standard, which I'm finishing up next week, sending off to the printers. You can pre-order it from my website, Saifedean.com. And I'm also writing a textbook on economics, principles of economics, in the Austrian school tradition, which will be out early next year.
Yeah. I love that. I love the idea of disrupting all legacy institutions and including the education system. And it's, over the last 20 years, technology has changed so much that it's like all these institutions have to be disrupted. Education is a big one. Do you think changing that model, as you say, like, are your classes, they're like pre-recorded, right? So then people can go through them whenever they want. And then you have the discussion that you add on, as opposed to the old model where like a professor has to be in the classroom giving the same talk day after day, year after year after year, right?
Yeah, well, I mean, the first time that I recorded them, it was being offered live. So there were students who could join the Zoom call, and we could have some discussion with it. But from then on, you just record it once. And then, the thing scales enormously that way, because it's the same lecture if you're going to be giving it to somebody else. And it's, there's no need for me and the student to be live online at the same time in order for him to get it. So they can just get the recording, and then they can join the discussion with me or with other members of the website. And that's the interesting part. And there's an enormous amount of extra productivity that you can get by just keeping the conventional lecture part
Yeah.
recorded.
Hey guys, let me just interrupt this interview real quick just to plug the show sponsor, and that is BlockFi. Now, BlockFi is doing amazing things in the Bitcoin finance space. As a matter of fact, they've cracked some really big news by bringing on the ex-CFTC chair, Chris Giancarlo, and they are one of the most transparent, most heavily regulated companies inside the United States, which gives me a lot of trust into what their services are. Now, I've recently did a video talking about how to retire off of Bitcoin, and you can do that by leveraging debt and interest against Bitcoin. And BlockFi is the number one company in the United States, or maybe in the world, to go to and use. They are leading the charge. They're paying interest on your Bitcoin if you park it with them, or you can borrow against it. Now, as I broke down in that video, you can borrow against your Bitcoin. And when you take debt against it, it's not taxable. It's not a taxable event. You can use that debt for anything that you want, including to live off of, to leverage up and buy more, or roll it into another asset. You can do something like I've done recently, like sell some real estate, put that money into Bitcoin. Now, as that Bitcoin price has risen, I'm able to borrow against it and go back and buy the same real estate or something similar. And I still own the Bitcoin, and I also own the new asset as well. Lots of ways you can do this. And BlockFi is the company that I recommend. Down in the description, I have a link that you can click on. If you choose to use that link, you can earn up to $250 in Bitcoin just for using that link. So check out BlockFi now. Yeah, I love it. I love it. I have a daughter who's starting to think about college at this point, and I'm not really a big fan of that. I secretly don't. Well, not so secretly. I don't really even want her to go at all, and not because I don't love education. I do. It's just that model, especially with the way universities are today. It's pretty scary to send a kid into that type of a system, take away their creativity and brainwash them at the same time. But being able to learn a specific subject like you offer, lets people kind of come in, specialize, get the information they need without having to take on all the extra stuff. So it's awesome. I love it.
Yeah.
So I want to talk about today. So, you're a PhD in economics, you teach economics, you teach really, I guess you would, Austrian economics, which is a big difference from what most people would learn in economics in colleges, which is typically more of the Keynesian type of economics. Do you want to just kind of talk about the difference of kind of traditional college economics versus what you teach and how that works?
I think the difference is that since the 1930s, really, since essentially central banks came on the scene after World War One, and then they started playing a massively more significant role in the management of their economies. After the 1930s, the job of an economist went from being somebody who studies economic reality and tries and explain it into being somebody who advises policymakers on how to fix economics. And so the approach is entirely different. Whereas Austrian economists think about the world as it is, mainstream economists are much more, in their mind, practical, in the sense that they're looking for solutions. They're trying to make unemployment go away. They're trying to remove the economic problems that they see, end poverty, or so on. And so it's much more of an activist mindset, where we need to approach the economic problems from the perspective of how can the government fix them, essentially. That's, I think, the difference in the approach. In terms of methodology, the primary difference is that the Austrian school thinks of economics as being human action, as being what individuals do. It's that there are human beings, and they are constantly in a state of economizing, because we live in a world of scarcity. We live in a world in which the amount of things that we want is much larger than the amount of things that are available, because it's much easier to want things than to make things. And so it's easy for us to want a lot of things, but we can't have them all. And so we're constantly economizing, primarily with our time. We're thinking about how can we spend our time productively, and what is the best use of our time, and how we can make the most of it, and thinking about all the different uses. So Austrian economics starts from the lens of, let's just look at individuals and how they act, and try and understand the economic phenomena that we see around us. And I find that to be an extremely powerful tool for understanding reality. as opposed to the Keynesian perspective, which is an aggregate perspective, which looks at economics from the perspective of what should the policymaker do, and therefore it analyzes the economy in terms of a bunch of aggregates. It looks at people as essentially cattle on a farm, and you're managing them in a way that maximizes their output. And it's there's not much room for the individual freedom or the individual decision making. It's a lot about what the policymaker and the central planners think is the best thing to do. So I don't. I think there are enormous differences, and I think in terms of methodology, the Austrian school starts from the premise that value is subjective. And since value is subjective, all economic action depends on humans' subjective valuations. And therefore, you can see how, consequently, whatever is best is whatever the individual values best for themselves. Whereas from the mainstream perspective that you learn at university, value and economic valuation is something that is computed by equations and by economists. And therefore, if you can calculate value and if you can aggregate it across people, then you can make economic relationships that then you can study the economic relationships between different factors in the economy, and then central planners can tweak these, intervene in a way that allows that brings about the desired outcomes that the central planners want. So it's an entirely different approach for economics. It's almost like the difference between astrology and astronomy, in
Yeah.
that nominally the two fields discuss the stars, but it's a completely different discussion that's taking place. And of course, the mainstream perspective has been dominant in universities in the US and all over the world over the last 80 years or so, 90 years, because that's what governments want. Governments are in charge of education, thanks to central banking, I think, thanks to fiat money. And spoiler alert, my next book, The Fiat Standard, can be summarized as everything I don't like is caused by fiat and fixed by Bitcoin. And I make no apology for it. And
Yeah.
education is one of those things. I have a whole chapter on education. I think the ability of government to print money has allowed government to what sounds like a very noble goal, which is let's just have the government give everybody the education that they want, make education more affordable, use education and the scientific method in the service of public policy. It all sounds very noble, and it's actually quite compelling until you get to grad school, and then you start really asking hard questions about how this thing works. Then you read the Austrians and you realize, oh yeah, that's not how the world works. All that's actually taking place here is that you're ending up with a bunch of people in charge of other people's lives and causing a lot of problems for them. And then society turns into a war of all against all, because whoever controls the printing press can essentially dictate reality for everybody. You can dictate what gets taught at university, you can dictate what foods get produced, what people can eat, what they should eat, what is legal, what is illegal. A lot of power comes along with the printing press. And in education, this has led to, I believe, the corruption of education in the 20th century, where if you look at universities today, they're free from market competition, they're free from the discipline that the market would give you, the market would force you to have in order to continue to operate. And so, free from that discipline, they have expanded and grown as bureaucracies, and they serve the interests of their funders. And that's, just basic human incentives. You pay the piper, whoever pays the piper calls the tune. And the universities are not paid by their students, even though the students pay a lot of money. It's primarily through government agencies, both through facilitating loans for the students and approving loans for students, which essentially means that the real payer is the government, as well as financing research and financing universities and financing professors, which is an enormous amount of money. So ultimately, universities end up serving the cause of the bureaucrats that fund them rather than the students that go there. And over time, you see what has happened. The teaching experience has degraded. The number of students getting to learn directly from a professor is declining. The number of students in a classroom is declining. The number of professors has stayed roughly the same, but what has increased massively at universities is the number of administrators, the vice president for this and that, and the vice president for all kinds of different buzzwords. And it comes with political baggage, and it comes with ideological baggage. And of course, the main driving ideology behind all of this is more government spending, because it's government spending that's financing all those things, and government wants to hear that government is the solution to everything, and that's the way to succeed in academia. So I'm extremely critical of the state of where academia is, and I don't really recommend people go into universities, because I think whatever it is that you want to learn, whatever field you want, with the exception obviously of some technical fields, say medicine, and specific types of engineering. But even with these, a lot of them is a lot of the engineering stuff is beginning to become more of a learn on the job kind of situation. So for some fields, obviously this doesn't apply, but for the vast majority of things that you could learn in university, you could learn them equally well online. You can find online lectures, you can find the syllabi of courses, you can find all the readings online. You can get all of the education that you could get at the best university for less than 1% of the price online.
Yeah. You just don't get that little piece of paper, that degree, which following economic principles, I mean, scarcity. So if every single person has a degree, how valuable is that degree, right? So I think it's taken some of that value away anyway.
Yeah, absolutely. And I think the entire value of credentialism is dropping, because credentials had a lot more value before the internet, when it was very hard to know who knows what. And being able to go to university and spend 4 years, say, at a physics department or at an engineering department, and come out of that university with a paper that says that you've done a good job, carried a lot of signal for an employer. You were obviously much more employable than somebody they pick up from the street, because you had a lot of skills and the discipline required to maintain yourself, to keep yourself in the program and pass. But now with the internet, you can see essentially everybody's background online through the work that they do. And so people can just do work and demonstrate that they can do the work online. And it's very easy to determine who can do the work, and then you don't really need the credentials anymore.
The credentials, the proof of stake, and then we have proof of work, right? Like
Absolutely. That's a
I,
good
I
metaphor.
staked my money, I did my time, I have proof of stake, but over here is my proof of the work that I've done. Um, it's an interesting take on that. So you set this foundation, and then you layered a whole bunch of stuff on there. If I peel all that back and I go back down to the layer, it seems like what I'm hearing is the difference of the two systems really comes down to maybe almost a difference in worldview, where one group of people believe like the world happens, it's this giant organic complex system, versus maybe the Keynesians over here believe they can control everything, almost like this godlike complex where the economy is a machine that I could build and I could manage, versus organic organism made of billions of people that have constantly changing wants, needs, and desires. And so rather than trying to learn and maneuver or navigate it, we want to play God and control it. Would that be a way to kind of sum that up?
Absolutely. If you read Keynes, one of the common things that you hear about Keynes is that Keynes has been misinterpreted by his followers, and a lot of the followers did bad things, and his ideas were better than this. It's absolute nonsense.
Mm.
I think the most damning indictment that you could say of Keynes is that he was a true Keynesian. And I think that's also the most damning indictment of Keynesians as well, to say that Keynes, because he was a truly despicable person if you look at him as individually. His idea of entertainment was trafficking in child sex slaves. He
Mm.
traveled around the Mediterranean to do this. So he had a very, very sociopathic bent to him, and he despised normal people, and he believed they needed his control and his supervision in order for them to be able to live their lives. And if you read his conceptions of economics, it very much flows from that kind of mentality. And in 1936, the German translation of his stupid book, The General Theory, was published. And you know what kind of political system existed in Germany in 1936? This was the Nazi totalitarian system. And he wrote a foreword for the German edition, and in the German edition, he said. Um, the kind of economic ideas that I'm proposing here are better suited for an economy like the German economy. So he was a big fan of the German centrally planned economy. He was a big fan of the Bolsheviks. He wanted to implement ideas like this in Britain, and to a very large degree, he succeeded in bringing about powerful central government and a powerful central bank. And he was involved very early on. In my next book, The Fiat Standard, I look at the point at which the Bank of England went off the gold standard. And Keynes was very much in the background at that time. He was in the Treasury. He wasn't very public about his role. But there was a point, I mentioned this in the Fiat Standard, which is it's not a very well-known story. It was only revealed a few years ago, 3 years ago. In 1915 or 14, the Treasury issued a bunch of bonds in order to finance the war, and they were less than one-third subscribed. The British people didn't believe that fighting a war on the continent was worth buying bonds for. They got around a third of the money that they got. And then what the British Treasury and the central bank did was that they got a couple of the employees of the central bank to buy the rest of the bond issue under their own name. So the central bank gave them the money, and then they bought 2/3 of the war bonds under their own names. And then the press publicized it. The Financial Times, ever the faithful mouthpiece of central banks,
Yeah.
announced that the war bond issue was highly successful and fully subscribed, and we're going to issue more, and everything is going great. And Keynes was involved from the start with this. And so there was definitely, all through his life, you see this element of, I know, I understand, I'm smart, you are all idiots, and I'm going to do whatever I need to do in order to make this work. And so from that moment, that's when England went off the gold standard, and that's when the world went off the gold standard, because England was the world's central bank at that time. And it's, the British pound has collapsed since then. The British Empire has collapsed, and world leadership moved to the US, and the US also suffered from all of the problems from this inflationary mess. And it's just been an entire century of totalitarian governments all over the world being financed by this crazy bastard animal of fiat money and central banks. And it's been devastating. Thankfully, Bitcoin fixes this.
It seems like when I've kind of gone through the history of this, which I have many times, in Britain, they left the gold standard temporarily for the war. And then it seems like when they tried to go back to the gold standard, which kind of caused the collapse, Keynes told Winston Churchill, like, hey, you've doubled the money supply, you need to double the price of gold. And he didn't. And Winston Churchill said, no, let's just go back to the same price, which caused that deflation to happen. Is that what happened? And did it? I mean, to me, it seemed like maybe that was one little piece of rational thought that Keynes maybe had at that time. And it wasn't really about debasement. He was worried about the debasement that did cause the collapse.
Well, I'm not entirely sure what he was calling for at that point. I mean, obviously, the correct course of action was to not engage in the inflation in the first place.
Sure.
Now, after the inflation had taken place, you had to just recognize the reality and say, well, this is what has happened, and let's devalue the currency again. Let's devalue the currency formally so that we move to a new exchange rate with gold, and then everything gets sorted out. But they tried to square the circle effectively of keeping the exchange rate high and keeping prices low. And so the result was that there was just massive economic problems. People were unemployed and prices were rising, and you had shortages, and the economy was falling apart. But I doubt that Keynes wanted to go back on gold at a higher price, because what he wanted to do was to get rid of the gold standard. He didn't want any fixed exchange rate between the pound and the gold standard, and that's what he got in the 1930s. The idea was, we just go off gold, and then we can just print all the money that we want, and then it's not an issue. Whenever we have a war, we print money. Whenever we have any economic problems, we print money. And then this is where the hocus pocus of mainstream Keynesian economics comes in, where, and really, if you really study it closely, and then you think about it, it's very obvious, particularly if you studied scientific subjects and if you studied how scientific theories come about. It's very obvious this is just a stupid after the fact story that somebody made up in order to come up with the conclusion that they want. The conclusion they wanted was, let's print more money, that will fix things, because they had the printers and they needed an excuse to print money.
Right.
And so the whole thing is just an elaborate post hoc rationalization for why actually, no, printing money is very good and it's going to work well. And so there's all these stupid graphs and equations and nonsense, essentially, that You analyze the
Yeah.
world in terms of aggregates, and then you decide that Keynes just posits how those aggregates relate with one another, and then he assumes that if you just get spending up, then everything else in the economy gets fixed. And so, how do you get spending up? You print money, and so you ignore all the consequences of printing money, and then you attribute all these magical um, results to it, and then you come up with the theory that says, "Oh, guess what? Printing money fixes our problems."
Right.
Such a transparent scam. It's like if you fall for it, I worry about you.
Yeah. Well, I think they don't want to give up the power of the money printer, and so they'll use all the power at their disposal to continue to convince us that they need to have the money printer. And so everyone's been duped. As Henry Ford said 100 years ago, if the people knew how the banking system worked, there'd be a revolution before morning. So of course they don't tell us that. It seems like Keynes was involved on both sides of that. Like, as you just said, right, his book was written in Nazi Germany. He liked that. He was consulting the British government, also the United States government, right? And he was instrumental in the Bretton Woods Agreement. And during that Bretton Woods Agreement, he kind of came up with like that Bancor system, which was, it seemed like his idea was, maybe to your point, get rid of the gold standard and then have like that neutral reserve asset that like maybe never came to fruition. And now we see today, like the IMF's calling for a Bretton Woods 2 moment. And we hear talk of this like IMF, like an SDR basket, which maybe they have thoughts of like having trying to do his original idea, which is have that neutral reserve asset. What do you think about that?
Yeah, I think it's a non-starter as an idea. It's unworkable, and I think it's unworkable on many levels. The first is the political level, which is why it didn't work in the Bretton Woods Agreement, because we had this essentially, this British aristocrat who'd never worked a real job in their life, who's just always been out there living in his world of fantasy and pontificating about how the world should work. You had this delusional muppet turn up at a meeting of the world leaders and saying, "Hey, we're going to get rid of gold. We're going to get rid of all of your money. And we're going to issue this new paper token that me and my buddies at Cambridge have come up with. And essentially, I am going to be on a committee of a bunch of my friends who are going to decide how much money everybody else in the world has."
Hmm.
And you can obviously see where the problems happen with that. Well, the first problem is that you run up against the United States, which has just won the war, has the majority of the world's gold, and has the world's most powerful military. And why would they give you the power to print all of that money? So obviously the US said, no thanks. We're just going to build this around our own money, which we can print, which,
Right.
we control. And so the program, the result of the Bretton Woods Agreement was the program of Harry Dexter White, who was an American communist, self-confessed communist, and some people say he was a Soviet spy, and he was investigated for being a Soviet spy, and he killed himself during the investigation. But I think it's more accurate not to say that he's a Soviet spy, in as much as he is just a local, homegrown American communist, and these people were quite influential at that time in the U.S. And it was their communist idea to just turn the U.S. into the world's central bank, and that was the idea that succeeded. So I think it's extremely naive to imagine that we could have monetary policy handed to a group of experts. It's naive to pretend that you are a neutral expert that can just take over something like monetary policy and run it like you're running a machine, when it's obviously something political. And it's not just political, it's you're allocating economic resources. If you decide to print money in order to give this government money so that it can fight a war, whereas you don't give the other government money so that it doesn't fight the war, then you're picking the winner of the war. So it's an inherently political question, and it's not something that can be just wished away. So that's the first issue. And the second economic reason why this is unworkable in my mind is that you can't just come up with this thing called Bancor and tell the world, hey, all of your money doesn't work anymore. All of the things that you value, all of your gold, your dollars, your yuans, and your euros, all of that is zero now. Don't use it. Turn it in, and we'll give you Bancors instead. Like, it's you cannot really do that. It's never happened. People use the term fiat money, And there is truth to the term fiat money, but there's never been a real fiat currency. This has never happened that somebody just went and said, "Hey, I've printed 1 billion of my coin, and here you go, accept it. This is the value, and this is the price of it." This has just never happened. Anybody who's ever issued a currency has had to back it by something in order for it to gain a value on the market. So
Right.
what you do is effectively you create a market in your currency with the other currency. So what most countries today do is they do that with gold, with dollars. Before, it used to be done with gold. So you gather a bunch of gold. If you have a bunch of gold, you can issue paper backed by that gold and make it redeemable in the gold, and then people will use your paper because they know they can get it redeemed in gold.
Right.
Similarly, today they do the same thing with dollars. You go to your central bank, you can exchange your local shitcoin for dollars. But so the notion that we can just get the entire planet to agree to dump their currencies and to give value to something is nonsensical. I think what's more likely to happen, I think there will be some element of something like this happening, is that we're going to basically replace national currencies by a an international central bank digital currency. But more likely, I think, well, I think this is already happening nationally, but I think more significantly is that excuse me, the reserve asset backing those central bank digital currencies is going to be something like a central banker's digital currency, which is used
Right.
among central banks themselves. So something like the IMF's SDRs right now. But what's going to happen is that, I mean, the IMF SDRs are essentially backed by US dollars because the IMF has a credit line from the Federal Reserve. So I think what would be likely to happen is essentially national governments turn in their currencies and transform their currencies into this international central bank currency. And then that currency is managed by, I mean, I guess this is really the interesting question that we're going to be seeing play out. If we still lived in a world that was dominated by the US, then I could see this being just a more modern way of running the dollar system, wherein the US just says, all right, instead of having paper dollars and running it on the SWIFT network and using the Federal Reserve's payment settlement system, we're going to introduce those new cryptographic based settlement systems, and everything is going to be centralized with the US in the middle, the US in charge, essentially formalizing and making the Bretton Woods system more efficient without gold backing. This is how I would imagine, if this kind of technology was available 20 or 30 years ago, I think this is the direction that we would have gone in. But now things are much more interesting because China is, primarily because of China, but also to a lesser extent Europe, they're not going to be crazy excited about joining a new dollar system. And so, more likely, what they're going to be pushing for is some kind of either a multilateral system in which the base layer money is jointly run by the US and China and maybe Europe, maybe some few other smaller economies here and there, getting like votes on a monetary policy board. But I think we're more likely to see monetary competition with the Chinese essentially attempting to bring about their own national currency to make it into the global reserve currency, because it doesn't really make sense to have a global reserve currency run by two governments, particularly governments that are essentially rival for
Right.
the position of world leadership. Now, given the way that things have unfolded over the last couple of years in the world economy, with the way that international cooperation has taken place around the coronavirus crisis, and the way that basically everybody marched to the tune of the World Health Organization and the World Economic Forum, you can see this kind of thing being implemented in national currencies as well. You could see perhaps we'll get something like this. And I think one hypothesis I have is that, as inflation begins to pick up, the central bank digital currency narrative is going to be marketed as the solution for the inflation problem. And so, oh, your dollars and euros and yens and yuans are devaluing not because of your government spending and printing a lot of money, obviously, because that's crazy conspiracy
Yeah.
theory talk. Obviously supply has nothing to do with demand, right?
Right.
No, that's not it. Your currency is tanking in price because it's physical and it's ancient 20th century technology. And Bitcoin is rising in price because it's digital and it's advanced 21st century technology. So we're going to copy Bitcoin's technology and use cryptography in order to prevent the value of your national currency from declining. So I can see this kind of pitch being given, and people being given their new digital currencies, which are going to, do the old Latin American trick where you just rename your currency and take off a bunch of zeros. So
Yeah.
I remember in Brazil they had the Cruzeiro, and then they had the Novo Cruzeiro, the new Cruzeiro, and then they had the Cruzado and the Novo Cruzado. I think it was the other way around. The Cruzados came first. But yeah, and then they went to the Real, and now the Real is beginning to fall apart, and I'm sure soon they'll introduce the Novo Real. So it'll be like the new dollar or the digital dollar or something like that. And uh, people will think, all right, well, now this will fix the inflation problem because this will copy the digital technology that will protect us from this crazy inflation bug that we suffer from. But I don't see that as being a sustainable solution, because I think you'll get, the U.S. is not nothing. There's an enormous amount of trade that is based around the U.S. So you're still going to have the Chinese and the U.S. and the Europeans trying to make their currencies be the world currency, but they would all, they would all like it if they were the ones who have produced the global reserve currency. But they can all live with it if the global reserve currency was one that was not issued by either of the other two.
Right.
And therefore, they could all tolerate something like Bitcoin.
Hey, sorry to interrupt this video just one more time. I'm not running Google ads, so it's actually way less interruption than I normally would have on a video. And that's because it's sponsored by BlockFi. They are opening up the world of Bitcoin and financial products, offering to pay you interest on your Bitcoin, better than owning a rental property that you have to manage and control and have the risks. You can just earn interest on it, or you can leverage against it. Now, I plan to hold my Bitcoin forever and literally never sell my Bitcoin. So how do you do that? Well, if I need money, I don't want to sell that Bitcoin. I'm going to pay tax on it. All right. I'm going to end up with less, and I don't have the Bitcoin anymore. So a better way to do it is to borrow against the Bitcoin. So I've put all my money into Bitcoin. If I want to buy a car or I want to buy a house, I can borrow against it at very, very low competitive rates, get my house, get my car, whatever that may be, and get to keep the Bitcoin. Now, I've done a whole video on this. You can find it. I'll link it down in the description below, how to retire off of Bitcoin without paying taxes. And you can do that with BlockFi services. I'll link to the video down below. I'm also going to put a link to BlockFi. If you choose to click on that link to check them out, you can earn up to $250 in free Bitcoin just for using that link. And that's it. Let's go ahead and get back to the interview. Yeah. That's where it seems like, like you said, right, they used to hold gold in their reserve. So, there'd be whatever percentage of their currency would be in gold reserves. And then they swapped out the gold for dollars. But if they used an IMF SDR, back to kind of what you said, like all value being subjective. So if everybody agrees that an IMF SDR basket has value and it's a neutral asset, then I guess they could agree it has value temporarily. And so swap out the dollars for the SDR as reserves. And then everybody's in that basket based off their GDP proportion. So they all kind of have a vote. It seems like they might be able to try to get that to work temporarily. Ultimately, it fails because of the scarcity, right? They can print unlimited amounts of SDRs. And at the end of the day, it's not backed by any real capital, right? It's just worthless paper. So I think maybe they get a little mileage out of it, but ultimately it ends up failing.
Oh yeah, and ultimately it ends up being an advertisement for Bitcoin.
Yeah. So, all this Keynesian stuff, it seems like we know the future, because ultimately it fails, right? I mean, you can't just create value out of nothing, and you can't control. And the more value you create out of nothing, the more you just continue to distort markets. So you mess up the signal, you get shortages, and you get surpluses, and you get malinvestment, et cetera. And eventually it fails. It seems to have. I guess on one hand, you look at it and go, well, we're maybe 50 years into this experiment, since 1971, and look how bad and how fast things have gotten in 50 years. But on the other hand, it's like, man, how long can they keep this game going for?
Yeah, and this is kind of the motivation of my book, which is, this thing's been around for 50 years, and just because it doesn't make sense doesn't mean it can't work. And it's been working, and it's been written off for 50 years. People have been predicting a collapse of the dollar for 50 years and longer. And yet it trudges along and people continue to use it. So In my book, I try and explain why that is, and I think the reason is ultimately that what fiat offers is the ability to send money quickly across space, across nations, across national borders. So gold is better money because it holds on to its value into the future better because nobody can print gold. And it's always going to have a low inflation rate because of reasons I discuss in detail in the Bitcoin standard. So gold has best salability across time. It's the best way of saving value into the future, or at least traditionally it was. But fiat has much better salability across space. Sending gold across space involves a significant loss in the value of it. It's gonna lose about 0.5% or 1% of its value when you ship it halfway around the world. When you think about the cost of shipping plus insurance, so that's really ultimately why I think fiat succeeds and continues to operate because it has terrible salability across time. You can't really hold on to it across time. It continues to lose its value. But we live in a world where everybody is interconnected with the rest of the planet, and you need to trade with the rest of the planet. And even if you don't trade personally with people on the rest of the planet, everybody you buy your stuff from does trade with people from the rest of the
Right.
planet. I know there's a lot of people that think, trading with other countries is a bad thing because it makes us dependent on them. It doesn't. Trading with other countries makes you less dependent on any one country. The more countries you trade with, the less dependent you are on other countries, and the less dependent you are on your own natural environment not screwing you over. So you're able to live a much better, more comfortable life because you can always trade with others. And so it provides you with a lot of insurance. But of course, the main benefit is that it's the division of labor, and the larger the circles with which we trade, the more each producer can specialize, and the more people they can sell to. So you specialize in making something smaller and smaller. We have some really highly paid people who are specialized in building one tiny little part of your car or your laptop, and they spend their entire life working on making the car windshield work well. There are people in car factories that are just doing this every day. They're specialized in something very tiny, and the only way that they can specialize in this and get so good at it and make such good cars is because they're able to sell their cars all over the world. And so this is what drives the specialization. And without it, we wouldn't be able to have any of the nice things that we have today. We can't have computers if we try to live as maybe the US might be able to pull off computers on its own. It's got 340 million people. But I think the vast majority of the world would not be able to produce anything advanced within its own borders. And that's just the way that a market economy works, because at every step in the way of the production of your computer or your car, the only way that it gets produced is that someone is making the decision at every step along the way. And not just someone, several people, like the guy who's making the tires and the guy who's designing the windshield. They're making economic decisions along the way to always look for the best supplier at the best price. So we are highly intertwined in this global system of trade, and we need it, and we need it very badly. And therefore, we have to trade with the rest of the world, and so we need a money that can cross borders. And governments simply prevent you from using any other money other than theirs. They won't license banks that use currencies other than theirs, and that just means that you have to deal with their currencies, and that just means that people continue to take it. But
Yep.
governments continue to inflate the money supply, and people have no choice but to continue to use it. But I think Bitcoin obviously changes this because you can trade Bitcoin internationally without the permission of your government.
Yeah. Yeah. What's interesting about that whole thing, obviously, with the specialization is, for progress, the more people we have that are looking at problems from different angles and coming up with different solutions and trying different things, the more
Yeah.
progress we ultimately have. And so, to your point, a small little country only has so many people. And so they're going to be very limited in what they can do. And the more people we can get into that global picture. And so, you and I were talking kind of before we started recording, and half the world is basically kind of excluded or left out of that entire system, right? I mean, half the world doesn't have any money, half the world doesn't even have internet, and so they're kind of left out of that, and they haven't really had that way. And so, by being able to give them a global money that's, one, can't be inflated away, but two, can be used anywhere, speeds that up. We saw that, going from the dark ages to the Renaissance age, when you had like a good standard coin that could be used kind of or recognized globally, how fast things developed. And so I think we'll see the same thing again, right? Having a new global money that can be recognized and saleable, as you said, across space. I think as bad as things are, as scary as things are, I see massive hope on the other side.
Yeah, I think Bitcoin really is responsible for maybe 90% of that hope. I think if Bitcoin didn't exist, I'd be extremely hopeless about the world at this point. I'd be in a very bad place because it's the crack in the wall. It's the place where all of the prison that they're building just unravels. They're locking up the entire planet essentially, and forcing everybody to be dealing in this giant corporatist economic system where everything is under the control of the government, and all of our lives are lived to the benefit of the governments that are in charge of us. And Bitcoin just allows you to have a free market, and it allows you to access a free market anywhere you are in the world. Anybody can access it from anywhere, and I think yeah, it is hope, as Michael Saylor says. Bitcoin is hope.
Yeah. So yeah, we've often thrown around things like Bitcoin fixes this, or fix the money, fix the world, or whatever, all those types of things. And I think really when you started out talking about how it's really comes down to that money printer, and then the money printer allows them to then influence the food or the culture or the energy that we have or whatever it may be, and to kind of control those things. And so then if you believe that individuals are better off creating their own destiny, making their own decisions, then we want to remove that control. And the way to do that then is ultimately to take that money printer away, I guess, at the base of it.
Yeah, and I think a century of fiat money shows us that the political solution is just impossible. It can't be done because it's just it's unhackable in the way that it is set up, because the people in charge of running the government are the ones that are in charge of the money printer, and so there's no conceivable scenario in which you can win the fight for the money printer if you're not using the money printer. So the money printer is always going to be controlled by people who want to use it because they can win control with it. The person who wants to win an election by telling people, I'm not going to build all of the stupid things that you want. I'm not going to fight all the unnecessary wars that you want. I'm not going to build all the children's hospitals that you think you want, but you don't really need. They're just boondoggles for people. All of these emotionally attractive things under a fiat system, basically it's an impossible strategy. And in a sense, like you can hate on politicians for this, but at some level you have to kind of come to terms with reality, which is, in a sense, yeah, when you have a magic money printer that can print money on demand, poverty is a choice. If you are poor in the US today, you're poor because the government didn't print enough money for you. That's
Yeah.
there's no running around that fact. The reason Lehman Brothers went out of business is because the government didn't print money for them. The reason Goldman Sachs and Morgan Stanley are still in business is because the government printed money. So poverty, Lehman Brothers is out of business. You or somebody you see on the street, they're poor because Jerome Powell doesn't care about them. There's no arguing with that. Jerome Powell could make them rich. They could just tell them, here, you get $1 million a month. It won't even be noticed on the Federal Reserve. $1 million a month is nothing.
Yeah.
And so obviously, the politicians that are going to be in charge are going to be the ones that are going to promise to take control of the printer and use it for all kinds of popular things. So I can't see a political solution for it. And I think this is just a beautiful example that's going to be taught for centuries about in engineering schools, about how engineers can solve everything. And in this case, in my mind, it's almost like, we're a frontier town and we have a problem of bears attacking the community and killing our children and eating our food and eating our cows. And it's like an engineer has managed to figure out this magic technology that just repels bears, and now we never have to suffer from that. And it's I think that metaphor is also very powerful, because that's exactly what a government really is, in that you can, up until Bitcoin came about, people who believed in hard money and sound money and free markets, you had no choice but to try and think of the solution through the political perspective. Like, we have these politicians that are doing things this way. We got to elect the better politicians. We got to raise awareness. We got to make people figure things out,
Right.
and then we'll be able to get it. And in my mind, that's as practical at this point as um, thinking you're going to negotiate with the bears so that they
Right.
don't eat kids. Like, we just sit down with the bears, explain to them, hey, we're building this town, and we like our kids, and we don't want our kids to be your dinner. So could you please stop snatching our children?
Yeah.
Good luck convincing bears about that. So, the right engineer doesn't sit there and try and convince the bear because he realizes the bears are not something you can reason with. The smart engineer figures out a technical solution that makes the cooperation of the bears irrelevant. You build a fence, or you have a watchtower or something, whatever it is, you put technology that repels them, that issues sounds that makes the bear scared and makes them go away. But you find a solution, and it's a solution that doesn't require the bears to cooperate. And I think this is what
Right.
Bitcoin is. It's just gonna be there. They can't stop it. It's gonna continue to grow, and they're either gonna join it or they're going to have fun staying poor. And it's either they join and they stop doing the bad things that they're doing because they start understanding opportunity cost, and they start understanding how expensive it is for them to be wasting their life in doing stupid bullshit that they're doing, and how much better off they could be if they were just stacking sats. Or you just people move away from the money printer money, and they use the harder money, and then that makes the money printer money powerless, basically. So either way, the bears are not going to eat your children.
Yeah, I love that. That's a good analogy. Um, if we look into the future, not going to try to tie you down to a price on Bitcoin, but what do you think about this transition process? Like fiat ends, sound money wins. I think we both believe that. But I mean, do you think this is something that we really start to see escalate over the next several years, like by the end of the decade? If we look at like S curve, like an S curve, which we typically use to look at adoption of technology, maybe we'd look at like the first 10%, and then that's the amount of time it takes to go from 10 to 90%. We could argue we're past 10% now. I mean, what do you think about this transition as far as time frame future casting? Do you think by the end of the decade, in the next couple of years, we really start to see this happening?
It's really hard to tell. I don't think it's going to be as quick as the end of the decade. I think the limit on Bitcoin scaling, this is, I think, something I disagree with on most people. Most people think of Bitcoin scaling as being a technical problem of getting this many transactions to be operated. And for me, the technical aspect of Bitcoin is, I'm not going to say it's solved, but I think it's a tractable, easy problem, and it can be solved tomorrow if the economic scaling works, which is what I'll get to in a minute. In other words, you could have the entire world economy running on Bitcoin tomorrow if the U.S. government tomorrow says the dollar is redeemable for Bitcoin. We've got a million coins in our stash, and you can buy a dollar at, say, you can buy a Bitcoin from us at $1 million, and we're redeeming the Bitcoin in dollars. Once you've done that, all of your transactions, everything, your PayPal, your Venmo, your checking account, your credit cards, all of that stuff is now denominated in Bitcoin effectively. So um, the issue of moving the technical aspect of payments, I find to be not the real challenge. That's not the real mountain to climb. The real economic scaling issue is the transition of people's cash balances from being fiat based into being Bitcoin based. And that's just something that's going to take a lot of time, just because it's an enormously complicated process. And it's a process that takes a lot of time for people to first learn what's going on, understand how Bitcoin works, being able to take care of their own Bitcoins and managing them, and then making the economic decision to switch over, but then waiting until they're able to make the complete switch, which can't be done overnight for the vast majority of people. So, and it's not about being rich or poor, whatever it is. You have a job or you have a business. You have you live now in a world in which your receipts, everything you pay, everything you receive is denominated in dollars, and so you have obligations to pay people in dollar, and you have assets of other people that are supposed to be paying you in dollars, and that's going to continue to be the case. So there's a small margin of you being able to take your money out of the dollar and putting it into Bitcoin, you can't do it with all of your money. Obviously, if you were rich and you just had a bunch of money in the bank and you didn't have much business, then yeah, you can say convert 99% of that money into Bitcoin, and then you keep 1% for daily expenses, and then you sell some of that Bitcoin. But for the vast majority of people, they have income and they have expenditure, and they have a cash balance that's essentially constantly being added to, uh, constantly having more payments added to it, and constantly there's payments going out from it. So you're limited in how much you can transition into Bitcoin from that. And I think we're seeing that transition happen gradually. And the thing that's obviously driving it is the fact that Bitcoin's price is continuously going up.
Mhm.
So what happens is people buy 1% of their net worth in portfolio in Bitcoin. Over time, that becomes 2%, 5%, 10%, 20%, keeps to increase, and they keep adding up more to it. But then, at some point in the future, without them ever risking the solvency of their business, at some point in the future, they're able to arrive at a point where they have a big enough stash of Bitcoin that it's bigger than the majority of their dollars. So that can't be done at once. We can't just click a button and have the entire planet upgrade.
Right.
Well, I mean, the U.S. government could, but I wouldn't count on that because, as I was saying earlier, we're not going to count on the cooperation of the bears. So, in order for it to happen as a spontaneous market process, it's going to take time. It's going to take time for businesses to upgrade, and it's going to take time for the Bitcoin to grow as part of their balance sheets. And as Bitcoin grows as a part of their balance sheets, then it becomes more likely for people to find trading opportunities in Bitcoin. And so,
Yeah.
what's going to happen, right now, it's the vast majority of people don't get paid in Bitcoin. They don't make payments in Bitcoin because somewhere around 1% of global cash balances are in Bitcoin, maybe less than 1%. So it's only 1%. So the odds of you coming across somebody who wants to buy something from you and is willing to give up some of their Bitcoin is 1%, but likely even lower. And so it doesn't make sense to base your business around Bitcoin entirely. And so you continue to accept fiat. But over time, as the price of Bitcoin goes up, and as people's conviction of Bitcoin go up, and as the process of Bitcoin education increases and the understanding of Bitcoin increases, you're going to see those 1% in everybody's portfolio begin to rise up more and more. And
Yeah.
you're going to see more and more trading opportunities emerge. And then you're going to see more and more of a Bitcoin based economy emerge. But I think it's going to be a while. And I don't think I don't think I think people who criticize Bitcoin on technical grounds miss the point. Like, Lightning is already there, it works. I use it. I accept Lightning payments on my website. You can pay me with Lightning, and
Yeah.
my customers use it, and I've never had a problem with it. It's there and it works, and it is going to grow. And so but the limit on its growth is not the technical aspect. It's not the fact that it can't handle enough transactions. It can already handle enough transactions for the whole planet. The limit is how much liquidity people have in Bitcoin, and it's just
Right.
not that much compared to all the other currencies. But to give you the
Yeah.
short answer to your question, I'm going to say 15 years.
Yeah. Well, I think it depends on what you consider that outcome is in 15 years. But to your point, in modern times, in the last 100 years or 120 years, gold was a reserve asset, but it wasn't used on a day-to-day transaction. So my savings
Not
went into
quite.
gold, right?
Okay, you're right. Yeah, under the fiat. Yeah, under fiat system.
Yeah.
Yeah.
I mean, so, in the late 1800s, early 1900s, I mean, gold was my reserve asset, but I was using fiat to spend or paper gold certificates or whatever they were at the
No, I
time.
think in the 18th and 19th century, gold was, you were using gold-backed money. So it was just second layer gold scaling solutions. Paper
Yeah.
money was just receipts for gold. So it was still gold.
Yeah. Um, and I put this thesis together that I've been talking about, and it's like three revolutionary cycles converging. And so obviously we can see the financial market every about 80 years is ready to be reset. They're calling for a reset of it. But then we have the technological revolution. Every 50 years is a technological revolution. And then there's every 250 years is a political, social, cultural revolution. And they're all converging right now in the next couple of years. And so it seems like every 250 years, the world rejects globalism or centralization and moves to decentralization. 250 years ago was the American and French Revolution. 250 years before that was the Protestant Reformation. So I think while everybody's looking for a centralized answer, will the dollar remain, and will it be the yuan? Will it be an SDR? I think the future is decentralized, where you and I use a Bitcoin standard. Some people still use the dollar. Some people use gold, and it's more of a decentralized answer than that. power from on high gives this decree. Okay, this is the new standard or whatever. But yeah, and I think we'll have massive change this decade. So we'll see how that plays out. It's interesting.
Yeah, I think I agree with you.
All right. Last question I'd like to ask, since you're an educator, I've read your books. I highly recommend them, and I value your opinion. I'm curious if you were to make your own Mount Rushmore, like the United States, we have Mount Rushmore with 4 presidents. Who would you put up on there that maybe were the most influential for you?
Hmm. Definitely, I'd put Marty Rothbard, Ludwig von Mises. Hard to choose between those two, so I'm not gonna choose. I'd have these two, and hmm, I could add Hans Hermann Hoppe as well. I think those three would be there. I need four.
You need 4.
I'll add Ferdinand Lips. I've only read one book of his. He's only written one book, I think. The book is called Gold Wars, and it was highly influential on the Bitcoin standard. The Bitcoin standard was essentially, to a very large extent, I think it was what Ferdinand Lips would have written if he was 50 years younger. He died in 2000, I think, or in the late 90s. And he was a Swiss banker who worked in Switzerland in banking, and he wrote a book on gold as money and the history of gold, and he understood the significance of hard money for civilization. He understood it very well and wrote about it very eloquently in that book, and it was enormously influential for me. So I would probably say these four, yeah: Mises,
All right.
Hoppe, Rothbard, and Ferdinand Lips.
Nice. All right, good. I know I caught you off guard with that one, but it was good to hear that. Cool. With that, we're gonna wrap it up. I know you have that book, The Fiat Standard, coming out really quickly. You were running a Kickstarter. Is that still running, or is that over?
Yes, it's still running. You can go to my website, saifedean.com/Kickstarter or saifedean.com/TFS, the Fiat Standard. And you can pre-order the book right now. It'll be delivered in December, but you can get the draft of the book, the almost complete draft. There's still going to be some editing done, but if you order now, you'll get the draft, so you can read it now in digital format. And then in December, you'll get the physical book, the digital book, and the audio book.
And you can get a signed copy of it on the
Yes, and you
Kickstarter
can
as
get a
well.
signed copy, and essentially the signed copy is my way of, people like to donate to universities that they like. I'm sort of cutting out the middleman, and if you want to support me working on these books, it takes a lot of time to write these books, and I'm self-publishing them. So instead of going to a publishing house and taking an advance, I'm getting the advance essentially from my readers. So if you buy a signed copy, you get a signed copy, and you get listed in the book as one of the supporters of the book. So please do that.
Yep. I got a signed copy of the Bitcoin Standard. I'm definitely getting a copy of the signed copy of the Fiat Standard. So I'm in. I'm going to put the link down below for everybody. I recommend that you go do that. And with that, we'll go ahead and sign it off. Thanks so much, Saifedean.
Thank you so much, Mark.
All right.
Pleasure talking to you. Take care.
All right.